All right, going through charts this morning. We're getting follow through from yesterday. Basically, this is how the story goes and how this all works in banking. Banks buy debt from the Treasury. Okay, it, that's part of the game. Um, so now what we have is we have the Fed to pull money out of the system by selling paper that the banks and the public and everybody has to buy. Um, then what happens is there's a shortage of capital. People need money, want money, whatever. And that shortage causes the price of money to go up. So now going forward here, unless some sort of calamity comes through, they actually run into a recession. The Fed's in a bind right now. So um, what we're going to have is money come out of the system. So it's kind of like if we take, if we start watering down your booze, that kind of thing. It's so between now and when the recession hits, it's going to be an uphill battle. The consumer credit, I think, is about $20 billion a month, if I remember correctly, and the Fed's going to start taking out $10 billion a month, and then they're going to move all the way up to $50 billion a month, which basically means if the humans take out $20 billion a month and the Fed takes away $50 billion, you can see how we're going to go backwards on this. So basically what you have is you're having the smart money actually get out of everything. Last week I wrote about that we're running out of fear. Well, this is kind of a bigger fear when you know you start taking away your bullets. So that's basically where we're at. So how I look at it as anything going forward, okay, unless the stocks actually have some sort of economic underneath, EBITDA and all that fun stuff, the market, the days are numbered. And like I said with yesterday, with the sharp unwind, we're basically getting full reversals. Everything gets sold during this time period. The only thing that I can see would be individual commodities. I just posted that it's going to be 120 next Tuesday, or the following, whatever. It's going to be 120. So of course I'm sitting here going, yeah, natural gas. But if you have bullish news and the market acts bearish, that's your tell. So running through all this here, let's see, hogs and stuff. The hogs take a short side on, and cows take a long side on. I'm not sure how this heat's going to work out. I do know one thing though is milk in Arizona goes to 3 gallons for $5 because it's you have to store the stuff, and when it's 120 outside, it's a little more work. It's 74 now, but it's a dry 74. Windows are open. When the air is set at 80 whatever, you can set your air at 80 whatever because it's dry. Open up the windows and bring in the fresh air. In the next couple of weeks, it'll never go below 85. And when I first moved here in 2002, into October, it wasn't below 100 at night. So, but a lot of that has to do with moisture. So, copper, same type of deal here. Going forward, it's an economic thing. So all these futures, the deferred months, should get beamed on. The dollar's going to get stronger as rates go higher. That's just how it goes. Let's see, what do we have? We have one more part left, probably down in this area at 50. So it'd be $1,400. 14 points times 750. We'll say 16. Divided by 4. So it'd be $4,000 here on the last contract. On copper, it comes down to here, right? Well, it's 10 times 250, 25, and another 1,000 more is 35. Yes, it'd be $4,000 round in here. Looks like we have contract rollover here coming in too. So that's how the story goes there. This would be over $4,000 here on the last contract here. Whoops. Come on, type. Oh, don't do that. All right. So on the last contract here, it'd be $4,000 on this one. This wasn't a bad trade too. Okay, moving on. Here's our cowsies. And here's our natty gas 94. So we are hanging pretty good here. The volume is beginning to drop, so you're running out of fresh sellers. Getting a hook on here is an 83. We'll make, well, should we bite? That's a $2,000 drop if it goes to 74. We'll bite. 294. Because it's looking forward, I'm kind of baiting it a little bit here too. We've had a pretty good sell-off here. ADX is reset and stochastics have bottomed out on 4-hour charts. NASDAQ. Okay, so we got about half back. We got a double bottom down here. This is going to be tough sledding here. I think this 6,000 area. Now what happens is you end up having a sharp short covering rally. I don't know where it'll ensue. What will end up happening is I'll go from these intraday charts to having to work off of daily and weekly as things progress because of when you're in a narrow range per se, not as much as on the NASDAQ, because the NASDAQ has a gap to fill. I wrote yesterday, what was it, about 2,500 or 25% lower, so this is going to be a tough sled here because of just the money's being pulled out, rates are going up, and if you're on margin, it's going to cost you more. So that's why I said things, try and look forward on this because, we're in 17, you can buy options that go out there, puts, basically it's all a time thing now. It's all a time thing until, basically what this is going to do is it's going to be a correction. Interest rates are going to come off during the recession, and then we'll have the last swing in real estate. But I'll probably spend some time going back to the 30s to see what would happen in regards to. We know with the Fed had to lower interest rates in 37, and stocks fell 55% in 4 months. So lots of stuff on there, but I would any type of rally on here. The ADX is up here, but any type of rally on here, I'd, like I said, just be defensive on this because, like I said, I'm looking forward a couple of years here. Actually, a good part of a decade because of the cycles, how it works. Your bull market, correction, then the blow off, and then the bear market, which is not for another 6-7 years, but we'll get something that comes in between here, a drop of 20 to 30% per se. This isn't the 50 to 90% shakeout that will come in earnings in the next real estate cycle. So platinum, why didn't you not reset? Why are you so big? Oh, stop it, Kevin. Alright, now why won't you reset? Come on, all the way over. Now get smaller. There we go. Platinum and stuff, they all got... They're all going to come off here. These are all industrial metals, platinum and palladium. Palladium held up swell on here, so that was kind of an interesting type deal to see what we have going on. Come on, you. How could you be so doggy? You're the only thing running. Oh, besides the video stuff. Alright, palladium here. Same type of deal here, rolling on over. So, palladium on the short side. What do we have? A couple up here on the short side, and down to here would be about 100. So that would be about $5,000, right? So the target down here was a happy place. Take part. We'll just have it sitting down here. So take part would be 100 lower, right? Plus would be plus 5,000. There's 50 ounces in a contract here, so losing from 61 to, I guess we'd have to come down to the happy part. I'll adjust that. Happy part down here is what I'm looking for. What would be this line though? 95 to, what's that? 55, we'll say. 60 points, that'd be $3,000. So this would be $3,000 for here and $5,000 for the lower line on shorting palladium. Gasoline looks like a hammer, still going to bang away at this thing. Gas does expand with the heat, though, so there is some where the owner has to adjust accordingly. Yes, gasoline expands when it gets hot, so you're quote-unquote getting more. You got me on this one. Alright, so what do we have here? So 50 for 9. So 9 cents to 4 is $3,500. 35. Okay. Alright. And the heat. Our refineries, our gas comes from El Paso, Texas. So watch the heat down in Texas to see if there's any flash explosions. Oh boy. That's how that goes, though, right? Mother Nature can be a bitch. Alright, so silver snagged the upper end up here. It was just a one-off short covering rally, and then just the swoon. Like I said, as soon as silver goes under $8, then I'll start beginning to accumulate again for the next cycle. You know, just go out and buy some 10-ounce bars and sock them away for the next time that it hits the fan in the late 2020s. That's a decade plus away, Kev. That's how it works. That's the accumulation period. Just go look at the 80s and 90s, a whole bunch of sideways. And then when you get older, don't worry, the decades, it looks a lot easier here. Kind of like the last peak in the market was a decade away, you know. And how did you guys do this last decade since the peak? That would be how that is. You should be at, if all works out, you should be at the top of your game here. If you were an investor, did what you're supposed to do, sock money away here, you should be up 400 or 500%, right? Right. Dividend reinvestment, that's the whole thing. So now what you do is you basically start saving money for the recession and stuff, just in case one of you loses your job. So just start, the stop spending game is over, unless of course you are making it hand over fist here. Let's see here, silver. So yeah, so everything is basically, all asset classes basically are going to unwind, and so we're going to everything's going to, whatever was artificially held up is now going to roll over. So because you're going to go into a recession, you're going to need less of the commodity. The only commodities I'd really watch are basically anything ag related to weather. That'd be about it here. Bonds and stuff, any type of any more highs, if they run into anything fear, I'd look to be on the short side of stuff. But that's, we pull out the money, the bond prices come down. That's what I'm looking for. So anything, if they run into debt, look for some more short side of things. VIX will pick up here too. Right now, I think we're opening. We'll get to ES here, but we're opening at the lows today. So we're going to get a hard run in the dollar, which should probably put a little bit of pressure on equities. We're looking for the old June swoon here, but like I said, after we get through June here, then we get earnings for July. So and let's see here, CBOE, VIX, okay, and YM. YM looks to be rolling over. We did a bunch of shorts up in this area, remember, overnight and things of that nature. I guess I could open it up just a skosh here, right? Open it up, Kev. Alright, so we have, what was it? Was this the overnight one? This was the overnight one. Where was it here? This was the overnight one. So here's the overnight one we held for the first day. Came through on here on a short, which was the line up in here, blah, 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 bounce off the bottom. Came on through, spiked through. This is the late day short covering rally on here, and this is the Fed. So I have to believe that whatever we do in the first 20 minutes of the morning or something, if we come back up to 21 280 level or something. I'd look for it to be a short. It's the Dow, so it's 30 of them, and it's price weighted, so anything could happen here. You could have a buyout rumor in Pfizer or some crap, you know. So, but like I said, I'm going to lean on the defensive side here going forward. The NASDAQ looks sick, you know, that kind of story. Same thing, you know, sell off on the debt, just basically let the stuff ride. Corn and stuff, same type of deal. Unless that heat comes in and we get something going into the 4th of July here, I gotta believe that this is pretty much over. The only one I'd watch there is basically soybeans. Fives and stuff. This is all one short cover and rally. Funds blew up, so we're going to see funds blow up. And remember, prior to Northern Rock going bankrupt, which was a bank, we had a couple of hedge funds at Bear Stearns blow up. There's a possibility of that starting it off here. So we're basically, the game is over. So that was your decade, and I hopefully you guys did swell on it. And now we work on our transition to a correction and a recession. All right, blunk, 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 short, 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 short. Same type of deal. Here's notes. Same type of deal. They're just everything gets sold off. Game over. Just a matter of time. The Fed started raising rates in 2004, and the market didn't peak until 2007. We've been raising rates since December 2015, so 3 years would be 18. So I'm just getting an early start on it. I won't. It'll be at least 9 months unless we have a crash, and S&P gets down to like 1600. Then I'll tell you, for you guys that are subscribing, I'll tell you that when I start turning bullish on stuff. But it'll be a while here unless we do get a crash. Beans, like I said, are the only thing that I would look for something with this heat. I'll go look at the heat map. Besides just where I am here in Hot Hole, Arizona. We are, Lake Havasu is one step below the Grand Canyon, or the Death Valley. One step above, one step below, if you look at it that way. Lake Havasu is one step below Death Valley is hot. But I do have the Colorado River, though, just in case anything should happen. And we do have some mountains in Kingman, about an hour away. I wouldn't mind doing the Lake Tahoe Reno thing. We'll see about moving here. It was fun while it lasted here too. Yeah, Nevada. Nevada sets up for tax-free state and everything too. And since I am looking to put something together here, right. I can go to like Laughlin. It's quiet. 24-hour buses for the employees. Empty homes they built for the retirees that were just going to piss away their retirement money at the casino, and they overbuilt, so they have whole sections still. It's because there's no jobs and it's more expensive, so they live on the Bullhead side in Arizona, get paid less, or they work on the Nevada side, get paid more, and then live on the Arizona side and get paid and live for less. I prefer to not have cable TV and live at a place where I don't hear a siren. That kind of thing. I like it quiet until I turn on my amps. But at one time there was a casino for sale for $9 million that had crossed my path for office space, because I was told if I hire 5,000 people that we don't have enough water, so I had to find an angle on that one. And the hotel has 1,500 rooms, so that would be pretty. You'd shack them up and put them in. But the little millennials like their little single roomers, and it's a hotel, whatever. You can give everybody room service, whatever. They're employees, they're young. Squeeze out their talent and put some money in their pocket, and they'll move on to something else. Unless they want to stay. There's nothing like if you just go to bed at night, right? And get up in the morning, get up at 4:20. The ones that get up early, basically that's what you do, is you pay them forever, whoever shows up first. on a consistent basis. And the rest of them that come straggling in, you just leave them, go answer the phone, that kind of thing. Massive short covering, did we get that? Yes, we did. Where did my little lines go? Did they adjust it? I don't know. Some must have been bad data that came through here, but it was still pretty grotesque on the short covering rally. Wheat. Wheat's kind of still hanging in there. Have to keep an eyeball on wheat there. 5 degrees warmer than yesterday, huh? Great. Yesterday was bad. 75 though now. That's what's nice in the wintertime. That's what the high would be. Just like right now. Just sunny and gorgeous. Dry. No mold. Alright, so wheat's kind of hanging in there. Alright. I have to keep an eye on them. This is rolling over, so the currencies are coming off. British pound is hanging in there. Any pullback on the British pound want to buy? We are getting a pullback here in the Mexican peso, which is a good thing. 6C's coming off here too. So we had the commitment of traders, so we'll probably clean some out. Today's Thursday, so we have another day to go for commitment of traders here. But I will lean that first leg is pretty much done on the Canadian dollar. Euro might as well continue to hold the shorts. The deal here is it's swiped here, so if we do run them in the morning for 20 minutes equities and stuff, this would probably be it. The only thing that's standing in our way is basically earnings for that come through in July. Japanese yen on a pullback here. Stronger dollar. It's basically it. But the carry trade is not going to play out as it did in the past. Here's our pullback in our Mexican peso. I'd expect it to come down even further on here. So that's the U.S. dollar Mexican. Keep an eye on that. Because when you play the short side, you do get the interest on here too, and I believe it's 6%, and at 50 to 1 leverage means you earn 300% a year in interest taking the short side of this bugger. I'm not sure where it's going to be here, so you might want to just put something underneath and trail it, but I gotta believe that the peso and that's going to kind of pokey its little head up in here. I gotta believe 118, but we'll put on a daily. You'll see. This is only day one. What happens if you have to give it 3 weeks? What's a happy place? 1885. We'll start with that, but what's up in here? A little under 20. So yeah, you'll want to maybe like a point and figure chart underneath here. Like I said, this is, best bet for the year is to short this thing. So, and here's our Kiwi rolled over. So your British pound, New Zealand dollar. Should be added some longs into that one to sock those away too. That's your 55 bagger long Great Britain pound versus the Kiwi, the New Zealand dollar. That's a 55 bagger. I guess that'd be a good bagger to make here over the coming 4 years or so. Make 55 times your money. Swiss franc coming off here too. This is a tell here. Usually they fly into Swiss when things get bad. But it's coming off, so the dollar is now regained its deal. Oil again here. What do we have? Brent. We're kind of the money flow has come out of all of this here, so it's one of those where it's this basically the whole Texas explosion here is basically what we're sitting on. You'd be amazed, right? Kind of a chop up in here. Like I said, the next levels. I'll go take a look, but the next level I think is 41 and then 43, so it's odds on the downside here. So we're at, we hit that happy place that we're looking at since forever at 45, and we're basically here. So, and to me, any type of bump on here would be a short because we are going into the recession thing. So I guess I did snap some through here. And what do we have? ES here. So here's ES. So just like the Dow, we ran up. This is the first sell-off. They went, oh hey, we buy every dip until it doesn't work. Okay, so now double top better was on the Dow. Give this, like I said, any type of run this morning or whatever. You want to play defensive on here, and we can go to new highs. It can work with earnings, but this is going to be lagging because every day you go forward, the Fed's taking money out of the system. So banks won't be able to offer free pre-approved credit cards anymore. Things of that nature. So. All right, ES here. So any bounce this morning here, like I said, I'd be defensive here. And if you're gonna, okay, the deal is if you sell your portfolio, you held it a decade, whatever, you're gonna have to pay a third. So the deal here is what I say is if you do have a core portfolio, sell calls against it and buy puts. Okay, and you can go out 2020, 2019, or play the futures and short it for your portfolio. That way you can hold on to your stocks and compound interest, because the whole deal with investing is it really doesn't kick in for 50 years. Okay, my grandfather started a bank in the 60s, and so it's kicking in here in my generation, even at 3%, feeding back into a bank for the last 60 years or whatever. It's turning into overdrive. Okay, so it's the same. I know it's going to be tough if you guys haven't started saving and whatnot, but that's the deal. You're going to have to sock it away. Now the deal is you'll want to start saving for the next 2 to 3 years for the crash or whatever. So any type of pullback, what did I say? 20-30%. Okay, there's a chunk that goes in there, and then you wait for it to fall, 50 to 60%, put a chunk in there. And if by chance the NAS should fall into the 75, the over 60 to 90 region, then you put in the last chunk. Okay, and it goes inside. The banks will be the last one. They'll be the most beat up, and it's the longest of the cycle. You could have bought Bank of America under $10 kind of thing, or under $5. I did. I sold puts $4.50. I remember playing that stuff. My deal was I wanted them to hurry up and split the thing, kind of like when they broke up Union Oil or Standard Oil. It worked out better, let's just say. So for now, any type of short covering here, but like I said, just put in alarms. Anything under, if we go under 2,400, we're headed to 2,100. Is kind of like how I'm looking at it. Look for your. Just automatically go 15-20%. Each individual stock will be different though. So, but I'll keep you guys, the subscribers up to date and stuff, and I'll give you guys tomorrow. Today I'm going to work on finishing. I'm trying to make it. I have it all figured out in my head. I have it all put out on my Excel and everything for automatically updating it. But basically, I'm trying to make it easier than just typing in like 3 numbers, buy it here and here, sell it here and here. I mean, I could just manually hand type it in, but I wanted to kind of put in formulas and stuff that says, hey, because when I look at it here, I should just punch it in on the other computer. That's what I should just do. It's only going to be 6 things a day or so, and then after I get the futures done, slice a pie, right? Because you sell something like up in here, you put the sell on here, you'll know when it comes out signal-wise in the morning, and then like when I do it before the close, an hour or so before the close. But then also after I'm done doing that, then I can go and figure out how to do the SMS thing where I just punch in one thing and then send it out to everybody. Since I watch this stuff all day long, and most of you, since we're at full employment, are at work, and I say, hey, change that number up to here to short it. And then everyone gets a text, and then it's a full-blown, start. All you have to do then is just be able to follow the signal stuff, depending upon what you have for money in your accounts kind of thing. Remember, there are smaller futures out there too, your micro accounts too, besides the 3 times ETNs. Because you want to, if you're going to snag onto something, you want to hold on to it. So here's gold, 40. So we're back to gold. So that was, the stop was moved up from 62 to 68, and that was taken out, and now we're down to 55. So there's going to be a bounce, whatever bounce there is here. This is going to be a tough read here because of you're going to get some decent swings here. You're going to want to watch an intraday tick chart on here. But this is basically, we're opening gold up on support here. So there should be some. I don't know how much of a bounce it is. If it's $6 or $8, we've got 58. So your 62 to 68 area is going to be your resistance now, and anything under this 55, whatever bounces here, you may get the pros to dump off in this. Where's the money flow? Money flows out of this here. So maybe we got we got 50. Let's just do this here. Slap this on, Kevin. 12, 53, 80, 80. And we're looking for a target of, how about 1258? There's a quick $500. See if that pans out. Stop would be, that's a tough one here with gold. Alright. Need to set an alarm up in here. There's 58.30. Okay, once it hits 58, I better get this out to you guys. I was doing the live stuff, but a lot of you, it's early in the morning. I know I gotta get up, and all of a sudden it's like, oh my god, he wants us to show up at 4 in the morning or 5 in the morning for a video. So now you guys have it. Alright, I got my alarm at 58. Okay, so that's a quick $500 or so. We'll see if we get to 58. This is euro dollars. We're in trouble. Well, that's all I can say, and we're back to hogs. Alright, so I'll let you guys go, and you guys have yourself a great day, and give the market 20 minutes or so, see how things pan out, okay?